But it is a stunning and sweeping trade agreement that the markets have looked over very, very critically here and decided could be a trend that could be their friend on top of deals already made with the likes of South Korea, the European Union, and a host of other countries, Japan included. So let's get the read on that. The market reaction to all of this. Nuveen Asset Management Chief Strategist Bob Dahl. Bob, is the reaction the markets are giving this justified?
It's a bigger reaction than I thought. I assume most people thought Canada would get done. It is sweeping, as you said. This is good for the U.S. It's good for Canada and Mexico. I think it's good for the world. And your last statement, I think, is the key one. It's the context. Mexico, Canada, the Europeans, Japan. What's left? China. And this gives the president a little more leverage. I still think China's a very difficult one and will take more time than most of us think. The fact that we've gotten this far, I mean, a week ago, Canada looked like this is going to take a while, but the folks stayed up late and got the deal done.
You know, the president made a remark to our Blake Berman on this, that I'm using them, referring to tariffs ongoing with the Chinese to get a deal with China, that hopefully they will never have to be implemented. The threat of their being implemented obviously does weigh on markets if they drag this out. But clearly he's cornered China, right? I mean, China's in a box right now because we've made ostensibly even general verbal deals with virtually everyone else. What do you think?
Yes, and I think if with these deals making progress and getting done, I's to be dotted, T's to be crossed, is it possible the president can corral support from these other countries to go to China to try to get something done there? That would be powerful. Us acting alone with China on the other side, this is going to take some time, but this opens the door for that possibility, and that's positive for markets. Look, fewer tariffs means less taxes, which means more business gets done. That would be good.
Real quickly, we talk about our markets going into the fourth quarter, of course, into October. While it's not the worst month of the markets, we've just come out of traditionally the month that was or is, and it was anything but. But we do remember October 1987. We do remember October 1929. Of course, we remember October 2008. So our memory seems to be burnt in about October as being dicey. Are you worried about October's? This one's starting off on a good foot, but what do you think?
I'm worried about every month when we started out, Neil. I'm not worried about the history of October. I'm always worried. What will the earnings look like? What will the conversations about forward guidance look like? We know earnings growth is slowing, but it assumes from kind of plus 25 to plus 20, which is still fantastic news. What will companies say about cost pressures? Are there wage cost pressures, transportation pressures, any of the tariff issues? This is what we have to lean carefully into to figure out where we go from here. But the earnings news should be good, Neil.
You know, much has been written, and I think you're among those who have been pointing this out, the distinction between our markets and other markets abroad that aren't doing nearly so well. I believe in the latest stats going into this trading day, we are trading at about a 16% premium. In some cases, anywhere from a 12 to 16% premium over foreign markets, particularly those in Asia that have tumbled badly because of the trade fears, and even some in Europe that have just sort of meandered along. Normally, that kind of a performance gap can only be corrected and can't be sustained until either the market that's on top comes down or the markets that are on the bottom come up. What do you think?
No, I think having some diversification outside the U.S. makes sense, but as a U.S. investor, I would still be overweight the U.S. Think about it. We have stronger economic growth, which is leading to stronger earnings growth. That's all come from primarily the tax bill and the rollback or the absence of new regulations. That is a powerful combination that other countries can't talk about.
All right, Bob Dahl, thank you very much, my friend. Good seeing you.